So one thing I like to do, rather than just saying, okay, I'm only going to risk 7% or 8% or 5%, whatever it is, I want to have a technical point where it should hold. So the 21 day for a lot of these stocks, especially early in their runs, it should hold above there. Or at least, it might go below it for a day or two, but it should not close below the low of 1210 because that's where it got support at the 21 day. So yesterday I was looking at it and it was probably about, let me see, maybe about 7% above the 21 day at the time. And so basically what you do is how much, what percent of your portfolio do you want to risk? I probably was only doing, yeah, I set it up to be a little under 5%. So let's say if you've got a $100,000 portfolio, you want a $5,000 position. And so you start doing the math on that, and it's like, okay, if I risk $500 and divide that by 0.07 or 7%, that gets you a $7,000 position size. So it's like, okay, well, maybe I only need to risk 375. So, take the math again, divide it by 0.07, and that gets you in that $5,000 range. So okay, I'm only risking $350 to get a 5% position in a stock that if it breaks out above 130, maybe I'll add some more, and maybe I'll target maybe a 10% position. So the whole idea is I have a clear line in the sand that if this thing closes below the 21 day, and not just a little bit, maybe 1% or 2%, that this, trade is not working right now. So it's really clear, like I should be getting out on a short-term basis. And, quite honestly, you can get good sized positions without risking a lot of money. I mean, if you wanted to, in a, generally a lot of people say, and, I agree with this, that you shouldn't risk more than 1%, at least initially, on a position trade. So again, going back to that $100,000 portfolio, that's $1,000. Take 1,000 divide by 0.07, and that gets you a 14% position. So if you've got a lot of conviction, you could just go out of the gate with a big position. 14% is a lot on an initial position on a stock like this. But again, you're risking 1%. So your big risk is maybe there's a downgrade or some bad news and it gaps lower, but that happens sometimes. But in a position like this, with the market in reasonably good shape, it's unlikely to happen. And so to me, it's a great way to think about position sizing and have a very clear technical level where if the stock is going to work, it should not break through that line. It should not undercut the low of the day, that got initial support off of the 21 days. So that is, in a nutshell, how I use the 21 day, and I'll do the same thing for the 50 day or the 10 week. It's just about sizing your position and having your line in the sand and making that line in the sand logical, that if it does break it, there's something wrong. Not that it's just, okay, I only want it, I want to keep all my losses to 3%. Well, you're going to get shaken out a lot.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.